Hi, welcome to the Market Alert for Tuesday, the 23rd of January 2024. So small caps rip as recession risk grows. A bonds bid, Bitcoin bar fed. And we've got US stocks indices printed fresh records but finished off their highs in a quiet start to a risk-packed week. So we're obviously not seeing the same news that I'm seeing. I'm not seeing an awful lot, but that's what the news are actually saying. We've got Richmond Manufacturing Index today. Let's just have a look at what this risk is then. Well, apart from we've got all the flash tomorrow, and just having a look through, we've got the refinancing rate from Europe, haven't we? But that's to stay unchanged there. Advanced GDP. So again, I'm not seeing a great lot. We've got ECB there again. But anyway, that's what the news is saying. As I said in yesterday's edition, they can contrive anything to justify any particular move in the market, or any retracement in the market that would be forthcoming, because they can then just add in these sort of headlines. Like I say, it used to be a trick that was used way back in the day with the FT journalists would phone, and or rather the traders would phone. No, sorry, the journalists would phone the traders and ask what happened, why did the market move, etc. The reason I stumbled there, I just was cast back to a time when I was phoned by a chap from the radio BBC. I can't think of his name, Hugh somebody it was, and asked me about what I thought the market would be at the end of the year, asking all of these ridiculous questions. I mean, we're going back a bit now, we're back to sort of the late 90s. I can't think of his name, but he used to be the correspondent for the FT, but his surname escapes me at the moment. Right, and it wasn't you, Edwards, either, just to clarify that before we proceed. Okay, let's continue and have a look at the markets, and we'll start off with the Dow. So in the Dow, we'll kick off with the monthly chart. We'll add a bit more in because it's interesting to see what's going on. We're actually above the 50 on the stochastics there. We're actually moving to the upside still, and all of the averages are in alignment as well. The 200 must be around somewhere. I haven't got it on, that's why, but if it were on, it would be showing the market obviously still strong to the upside. Weekly chart, the same there. You can see we've got everything in alignment. We are starting to see a bit of a drop off in momentum though in the stochastics. They have crossed, but that doesn't mean to say that the market's going to reverse just yet. It can continue to move to the upside. And yesterday in the daily chart, the market moving higher there as well. And again, you can see all of the averages in alignment. So again, still strong on the upside. You will get the odd day or two where you get a retracement to the downside. But on the whole, you can see where the long side is paying in these markets. And yesterday we saw the market sideways. Then we ripped higher on the open, but unfortunately the market couldn't hold. It's no surprise really when you make a new all-time high. As I've mentioned before, the market does like to actually pull back a bit and have a bit of a breather because it takes a brave trader to continue to keep pushing those highs without taking some sort of profits off the table. Overnight, very quiet. The market stuck in a sideways range at the close, and the DP for yesterday in the 30-minute chart, bit of a drop off in momentum there. In the daily chart, momentum wise, we're not overbought yet. We've got more on the upside, so it depends on what the news media perceive as the risk week and what this impact has on the market. But of course, going back to the monthly chart, we have no record now of or targets, I should say. We have a record but no targets of where the market is likely to go. But given that it's 38,109, 39,000 or 38,500 would be the next target for the Dow on the upside should it continue. In the German DAX, again, let's start off with the monthly chart. Momentum's dropped off quite a bit here, but we are trying to tick back above the fast and slow stochastic there to move back above that midline as well. Market sideways, 17,400. Hasn't quite been taken out on this one last week. Let's just see if we can see what the high was. Where did we get back to? 16,961 there. But sideways. It needs to move back up with the market there. In the weekly chart, also you can see we've got a bit of a drop off on momentum there as well, but still above the midline. which is a positive. Yesterday we started to move back up again. There's some selling around there, but we had some demand the day before, which was Friday. The market then attempting to move higher. So what you want to do is to just draw in some fibs to the upside on the weekly chart there, see where your targets are, heading back towards those all-time high numbers. And in the daily chart, so you can see we've picked up on the momentum there. It's obviously going to lag in the weekly and the monthly chart. These are the targets to the upside at the moment. And of course, you've got this one, which I forgot to mark up just here at 16,961. That was the high of this month so far. And there you can see all of your targets to the upside. You can actually put some fibs in as well. I've drawn in one from there down to there, and that gives you the 89 there, just in case we take out the high of this one, which is 16,709. You can see we're just slightly above the 78 there as well. 30-minute chart, we tried to move higher, but then we moved down, and then we came back with the Dow and above the DP and close at the moment, and heading for yesterday's high already. The markets are moving up quite strongly at the moment. If you look at a smaller time frame, such as 5 minute, you'll see there the market already heading up and the momentum to the upside there as well. It's just a matter of what it does when it gets to yesterday's high. Again, you can see how it's already starting to put this on. We're up about 25-30 points on the overnight so far with the DAX. S&P 500, start off with the monthly through the high that we've had before, 4817. Let's just have a look, see where numbers are at the moment. So we can get rid of that one now. We'll just use the high of each day, or unless it's left behind, of course. So 4868 there. So again, 4,900 would be the upside target for this, the next sort of psychological level. In the weekly chart, still moving to the upside there. Tell you what, let's just move to the daily on that one. Again, you can see 4868 tying in nicely, and the momentum still moving to the upside. Volume's dropping off a bit though, so again, just like I say, we are due for some profit taking in these markets. FT100 down in the doldrums, 89% retracement last week. Market volume dropping off a bit, but we have crossed over on the stochastics and starting to move back to the upside a bit there. 30-minute chart for yesterday. We obviously over enthusiastic to begin with, trying to follow through with Friday's highs. Market failed, moved back, came back with the Dow though, as it had another run at putting another high in, which it succeeded in doing yesterday. The high of yesterday is already in the radar of the FT100, just as the German DAX is at the moment also. US dollar down on the overnight, which is helping the metals markets. But let's have a look at how silver got crushed yesterday, and it's not over yet on the downside. You will get a bounce over the next few days. But tell you what, let's have a look at it. Instead of me just trying to build a picture, let's bring up the chart. So in silver yesterday, absolutely crushed down to the one at 21.87. It didn't quite get down to that level, but you can see a lot of volume there yesterday. We are oversold, so we are due a bit of a bounce, even like we got there before we get the next leg down. They're trying to attempt to move higher. 30-minute chart started early in the morning that we saw yesterday. London fix. Look at this, just blatant down, and then you can see the shorts getting out and the market coming back. It's got a bit to go before it gets to yesterday's high. Certainly oversold overnight, and the market's taken advantage of this as prices move to the upside. Got the 200 MA in the way, and also the psychological levels, which are really important in silver. 22.5, $22.50 per ounce, absolute bargain, when it was $50 in 1979 and 2011. Gold, a lot better than silver as far as support is concerned, nowhere near the recent lows, and holding quite well there. Stuck in a sideways range though, as you can see from yesterday's prices, but moving nicely in the Asian market to the upside towards yesterday's high. Let's have a quick look at the gold-silver ratio. And continuing yesterday to the upside, up to the 92. I've been speaking about that for weeks in the alerts, and resting a bit there just as a temporary measure. See what happens when we get the markets up and running later today. And the reason I'm stalling a bit is you'll see in a moment, because I'm just looking at the other screen what's going on, but I'll get to that in just a second. And that's not to keep you watching, but it ties in with the basic trades, which we're going to look at now. So yesterday we had a lot of, this is another pattern I've noticed at the moment, we have a lot of volatility in the pre-market session, which you can see in the grey there. You can see the market bouncing around. As soon as it opens and the cash market comes on, look at this, just trades sideways. It's the most infuriating thing at the moment to actually live with this. Just look at it, it's just sideways. We move up and then we go through the scalp and then, you know, lock in a few profits, and then the market starts to come back, and then we get a short and the market goes down to the high, and then it starts to make its way back, having collected the profits on that trade as well. Just trailed the stop down. I mean, it was good yesterday, they were all profits, and the market down again there, and then sideways, and then starts to move mid-morning, and then you can see there at the close, and then the market holding at that sort of level, and then the afternoon just sideways, and then moving up with the Dow, and then just getting into a sideways move as well. It's just incredible. So all the moves at the moment are taking place outside of what times we would normally think. 8 and 10 is happening around 11, and then 1 p.m. when the electronic Dow comes on as well. Very strange. Just to prove this, let's just have a look at the overnight, and you'll see we've just moved up 20 plus points. Actually, no, say 15 points. That's a 15-point move, just straight through the high as I was recording the alert and talking about the metals. That just caught my eyes. It sprung up on the other screen. So maybe this is an interesting thing when this happens as well, that they've run the market up early because they've got a lot of sell orders waiting in the cash market. So it boosts the prices before they then open the cash, and they can get a better price for the those that are getting out. We'll just have to wait and see. So already through the high, we spoke about it earlier, it's already happened during the recording of the alert, so that's done and dusted. So what I'll be looking for is the market to pull back and then maybe go south. I'll just see what happens as and when, unless of course you trade in the basic. Hopefully you'll get a signal to the short side. Okay, that's it for this one. A bit longer than normal, but there's quite a bit going on there with the background of the market, so I'll leave it there and say, as ever, thanks for watching, and see you in the next one.